Good evening, everyone. Welcome to Mount St. Helens Day. I remember that. There's more goings on with the SpaceX IPO. Shareholders approved a 5-to-1 split, but with 21 different known underwriters, none of them are European. ESA is opening a 15 million euro call for a suborbital launch campaign. A House panel basically restored NASA's budget cuts. Does that sound familiar to any watcher of this show? Tulip mania continues across the pond as one UK fund quadruples on space stocks. Northrop Grumman nailed a $398 million satellite contract. Axiom is opening a subsidiary in Japan. Intuitive Machines is acquiring more companies. Voyager stakes a deal with Red Hat for enterprise Linux in orbit. Zenk Space raises $26 million and expects to launch later this year. And that wacky Jim Cramer has something to say about the SpaceX IPO. Can you possibly imagine? All that and our guest, incubator maven Ron Wiener. From the news desk at the Center for Space Commerce and Finance, my name is Thomas Andrew Olson, and this is The Unknown Quantity. And as you know, this program is brought to you by the Center for Space Commerce and Finance. What do? We champion and strengthen emerging space startups and space-adjacent enterprises worldwide through advisory, access, and advocacy. Our pitch events and world-class boot camps fortify startups to be better investor-ready. A lot of our work, especially this podcast, is supported by our listeners and fans like you. So just go to cscf.space/support and click that Point of Day Donate button. A little on the tip jar each month makes a big difference. Don't forget to like and subscribe and tell your friends. Speaking of friends, my oldest space friend, Michael Lane, who's apparently opening a new eatery called the Alpha and Omega, is here with me. And Michael, come on in, man.
Hey, how's things?
I don't know what your menu's going to look like. It's kind of,
the Alpha
quite a
and the
spectrum.
Omega. Awesome. How are you?
I'm all right.
Veronica is saying that it is hello and sunny and disgustingly hot in Arizona. I'm still wearing it's a light sweatshirt, but I'm still wearing a sweatshirt up here. So
we're on the summer pattern here now in Central Florida. It's going to be about like 90 every day and a little more muggy, and it doesn't get down below 70 at night, and so there we are. And so you'll get a small window, like if you want to work in the yard or something, and then it's like it's too much. I can't do it. It's like, so all the snowbirds are gone though. That's something.
Yep.
So.
Let's jump into it. What do we got? We got a bunch to cover today.
We got a bunch of weird stuff today. I like this thing from this more news from the SpaceX IPO front. Apparently, just prior to that, just like a few days ago, the shareholders they approved a 5-to-1 split.
Crazy.
Yeah. Little more for everyone here.
I love that.
Oprah. Shares for you. Shares for everybody.
Channeling Oprah. Yeah, exactly. Yeah. I kind of love that. And I think it's going to make the retail piece of this so much easier. Mm-hmm. I think it's a super smart move. Smart move.
Yep. But then the other side of that is kind of weird. There's like this next article, European Business Magazine. They're saying right now the underwriters for the IPO they've had a list of 21 underwriters. There might be none of them are European.
How does that happen? That has got to be a decision, right? They're like, okay. Everybody's cool except Europe. Like that seems kind of insane.
That's a decision. Someone made that decision.
Yeah.
Maybe.
Why?
Well, I don't know. I mean, I don't want to put on my tinfoil hat today. That's a separate episode. But,
Right. Okay. But seriously, I cannot come up with a reason. They are alienating. Well, not. It's not like these banks don't have reach over there. They definitely do.
sure.
But it is weird. Nobody from Europe, nobody from Asia, and it's not like folks in Europe and Asia are not paying attention to this. So,
I can't imagine there's some regulatory issue that they're trying to sidestep globally. I don't know. That's so
they're
weird.
not going to share how a rocket works in their K10 10Ks, right? Like they're not. That's not how they work. So
Yeah.
There's no ITAR elements to this, so I don't understand that at all.
Mm.
And if I was Europe, if I was Asia, I would be pretty pissed off. Yeah. I think it's, from an outsider perspective, it looks really weird and a little bit A, missed opportunity, but B, America has more of a risk tolerance. We will take on risk in ways that other parts of the world do not.
Mm-hmm.
So that makes some sense for trying to bring in the retail investor. But I mean, why would you lock out some of the biggest banks in the world?
Right. I know.
Yeah.
But to go along with your thing, we share that same saying with they say in Russia, he who does not risk never drinks the champagne.
Right.
We live that like they do. So here we are. More here's something new, more on the front of developing more sovereign capabilities.
Yep.
ESA called the design and development, manufacture, launch, and recovery of 5 scientific experiments aboard one or more sounding rockets. And so they're looking for sounding rocket companies, and they have a budget of 16 million euros to launch those. It's a very simple thing. It's a chip. It's a chip 2.
Mm-hmm.
And there's Life, Acti, and Fermis, and P-Rex, and Lambda G. I don't know what all these things are, but they're just trying to, in fact, Lambda G, they're testing laser-based metal additive manufacturing in the absence of gravity. And I guess the brief absence of gravity is good enough.
Right.
And so they're out there looking for rocket companies to apply. And so we'll see how that goes.
What was that project that Tomlinson used to run right in the early days? Fines or First?
Fines. It's called Fines.
Fines. What was that thing? What was that? Isn't this like an update of what Fines was? Remind me.
Well, no, it was Fines. Like, what would that mean? Fund for the international something and development of space.
Okay.
I know Walt Anderson was a big funder.
Yeah, that's what I was thinking about.
And so it was. I think they were just trying to have a little fun to throw out some grants to some smaller startups in various areas to see what they could come up with. And it's kind of throwing $10 at a wall to see what might stick.
Right. That's what this feels like. This feels like a 21st century, because Fines was the end of the 90s, I think. It was before I was in space. So
mid to late 90s they started that.
So this feels like a updated version of that. Like let's throw a couple things out there and see what happens. And recovering. I think that's great.
Right. Now, this should be a big duh moment for everybody. A divisive House panel markup backs NASA's budget increase. So this happened last year. They tried to cut the budget to 16 billion, and somehow it got back to 24. And they've done it again.
Right.
We predicted that right here on this show.
Right. No surprise there.
Yeah. So different players, same game.
The administration gets to say, we cut everything because we're going to be hardliners on budget, except for defense, which gets a whole lot of extra new money. So they get to both sides get to win here, right? And I guess we get to win too, because they're playing the game the way we want it to be played. So
absolutely.
Yeah.
Absolutely. Here's my thing about what I call tulip mania.
Yeah.
It really happens here. There's a space stock craze, and I guess one UK firm quadrupled just recently.
Right.
Because it's a British SpaceX supplier, Filtronic. Their shares are up 232% in a year, and a German satellite maker, OHB, gained 547% in a year.
Right.
And of course, guess what? Another standout winner was Seraphim Space Investments Trust.
We love Seraphim. Yep.
Yeah, we do. And their stock trades at 74% premium to its last reported net asset value after quadrupling in price.
Crazy.
They just raised another 137 million pounds to expand their portfolio already. Yeah, Reddit and X are buzzing about its meme stock style rally.
I don't think I agree with that.
Yeah.
Okay, I don't know these companies. These are not. I don't follow publicly traded companies all that much, so I don't know the details there. But it does not feel like a meme stock style. They've been warning that the SpaceX IPO is going to have some tulip mania attached to it. I don't know if I agree with that, and I wouldn't. Almost all. I think all publicly traded space stocks are kind of trending up right now, just on the basis of SpaceX alone.
Yeah,
I don't think it's a meme. I don't, but
right.
We'll see.
Well, we'll see. I mean,
what could possibly go wrong is
I've had some ideas about this stuff and where to go next for many years. I toyed with writing a book about it. I might just actually finish that damn book in the next few months, because when I first shopped it around years ago, nobody gave a shit.
Right.
Nobody gave a shit.
Right.
Nobody gave a shit about space scalable. Nobody cared. So I finally went, so I just kind of let it sit there. But you know what? You know what's going to happen? Once SpaceX and just a general AI and space stuff, once that sucks all the oxygen out of the markets,
right?
And people go, oh, fuck, where do we go now?
Right.
Well, I have a few ideas for you. Here's about 100 different ideas I have for you right now. And you just buy this book for $15 and it'll go to the center and you'll get an education you can't get anywhere else.
You've got 3 weeks to do that, sir. 3 weeks, because that IPO, they named it. It's going out. It looks like it's going to be the 12th of June.
Yep.
So you've got that amount of time to get this book written, crafted, and you can do that. AI can make that happen, but you've got slightly more than 3 weeks.
Well, now I got a lot of the shit covered on all the stuff we need to do for ISDC.
Mm-hmm. Yep.
I actually do have a couple of weeks to work on stuff like that now. I've got a little extra time. I can
you can bet I'm going to talk
about down. Yeah, I know. Sean's like Captain America today. He's going language. Yes, this is an adult program, in case you were wondering.
Right.
Yeah, back at you, Sean. Yeah, back at you.
Yeah.
Let's wrap with Cap. Okay. All right. What's up next?
I just want to do a quick shout out to everybody. We're getting because we were talking about temperature. It's 95 in Pennsylvania. Hey, Joe. 86 in Washington D.C. Hey, Dallas. Joe, you didn't give us your weather report there, buddy. Joe Prostruto. Sorry, I'm confusing them. Morty, how's things in Texas? So thanks y'all for being a part of this. Veronica, all you guys are terrific. Appreciate your time.
Okay. This next one's like 15 seconds. We can just skip it because there are no words associated with it. It's space news. Unless you subscribe, they won't give you anything. But I just want to say it because it's a lot of money.
Yep.
Space Force awards Northrop Grumman a $398 million satellite contract. The Space Force got billions. They got all this extra money, and everybody's gonna wonder, well, where's it all going? Well, here's something. Here's a big chunk right there.
Yeah, no surprise.
And it's all about ACE. It says the company will build a communication satellite to test protected communications technologies for contested environments. Notice it was singular. A satellite.
A satellite, $400 million,
Yep,
checkbox. Yep.
yep, yep.
We've been
Oh,
there.
and they're all having the champagne at Northrop Grumman going, this is like the old days. Woohoo! My God.
Oh,
Oh, so
yeah.
they're all happy
That
tonight.
that funds an entire space company for half that, right? I could get my, just for perspective, y'all, I could get my whole elevator built for and save $50 million. And Tom could build 10 of his companies for that
Yeah,
amount of money.
right, right.
10 for Tom.
Can't have the altos.
Right.
No?
And
Yeah.
we could have the entire functioning elevator with 50 million to spare off of that. So
Yep.
perspective. Good job. Good job, Northrop Grumman.
Nice
Moving
work
on.
if you can get it.
Nice
Right.
work if you can
That's
get it.
really, yeah.
Yeah.
Now here's something I don't know to be happy or concerned. Axiom Space is establishing a Japan subsidiary to serve their growing Asia Pacific demand. Just a year or two ago, they were whining they didn't have enough money,
Right?
and now they're setting up facilities everywhere and breaking out into Asia. What's that about? Where are they getting
Oh,
it?
I totally can answer this one. Watch
Please.
in 2 months, they're also going to set up a subsidiary in Germany, right? We've already talked about Japan's $8 billion government commitment to space, and we've talked about Germany's $40 billion commitment to space. So naturally, Axiom plays their government relationships card, and they set up offices in both places. Like that makes perfect sense to me. I don't like what they're doing, but I could. That's the playbook they're playing from.
Maybe that's what we're doing wrong. The Center for Space Commerce should set up subsidiaries
Right.
in Japan and Germany.
Japan, Germany, Luxembourg.
London.
That's starting point. Yeah, exactly. Right.
Yep.
We know the kid who built space in Africa. He came through your competitions.
That's true.
So we could set up in Africa too.
And he's
I
still
don't
doing
remember
well.
which country he was in.
Yep. Yeah.
All right, moving on.
Okay. Intuitive Machines, you know more about this than I do. They're buying stuff right and left.
I
And
could
they're
not
picking up a couple more
believe
things.
you.
Yeah, look at this.
I saw this and I kind of lost my damn mind. It kind of makes perfect sense. We've talked a lot about intuitive machines. We've talked about this roll-up strategy that companies that are super well capitalized, acquiring massive capabilities, right? Buying whole companies, buying in this sense. This is one of the most storied ground stations ever. Maybe second only to the Dish in Australia, but this is a bold move. And frankly, I was pretty surprised that Europe let this go, that UK specifically, because they're trying to build their own space systems. I was surprised they let this go. You may not remember Charles Radley. Do you remember Charles Radley?
I know Charles Radley.
He and I worked really hard at buying a dish down in Carmel. There was an Earth station down there that was equal to the early days of Goonhilly. This is a great move by Intuitive Machines. Totally on board with this. It completely makes sense. And they need a big ass dish to talk to the moon. So good on them. Super smart move. And all the other assets they're going to get with this and all of the other income they're going to get from this, super smart move. I wish I knew more about the structure of the deal, but yeah, this was genius. And I'm really surprised UK let it go. Like I would have thought their regulators would have shot that down for sure.
I know, but they're not shooting down much of anything lately.
No.
And so, but we're still booming.
We're
one of those things we're still growing. You know, our thing is still growing.
Yeah.
Space is still growing.
Yeah.
630 billion, 650 billion. It'll be $1 trillion by 2030, probably. So I guess as long as we continue to grow and keep adding value, they feel comfortable in putting a stake out there, way out there in the ground somewhere. And and picking up more stuff. Might as well do it while things are booming, because once things start to contract a little bit, then that part stops for a while.
Right.
And so we're not contracting yet. We're not contracting
When
at all.
that music stops, though, it's going to be a jolt.
Yep.
It's going to be a jolt.
So here is something I did not expect at all. I know Voyager is, doing all sorts of things right now, and but I didn't see this one coming. And I'm an old techno geek from way back, but they're working with Red Hat to put Red Hat Enterprise Linux. That's very specific.
Yeah.
Okay. Into orbit with space edge micro data centers. So the size is right. Linux platforms are very, very lean anyway. And of all the various Linux providers out there, Red Hat was the one that really went out for the data center and really went out to take that niche and take it over.
I don't really have anything to add to this. I think it's fascinating, but, big fan of what Voyager is doing.
But you want to do that up there. Okay, who are you selling it to is what I'm trying to figure out.
Right.
Who's going to use those AI Linux data centers?
You've got StarCloud with a request for 88,000 satellites. Cowboy Space used to be Aetherflux as of 2 weeks ago, just raised 275 million. We talked about that last week. For the new news is they're putting up 20,000 satellites.
Mm-hmm.
We know that SpaceX is doing 1 million satellites, according to the FAA and FCC. So what does Red Hat and Voyager get from this deal?
Right. What are they bringing to the table?
Right. Like, cool press release, but seriously, so what? It doesn't say anything that's not already being done as far as I can tell.
Yep. Well, and it doesn't really describe what they're doing and who they're selling it to. So it doesn't. It gives more questions than answers. In this case.
What's Mealing's line? Who's your customer's customer? I don't get who this customer, their customer is.
Okay. Two more things. We're almost done here.
Yep.
A company I've never heard of called Zinc Space raised $26 million, and they're targeting a June debut launch. I didn't even know what they did until the second half of that clause, the dependent clause. But they are China, so that tells you something. That is a China company. So they're going to be launching at Akuru, I guess. That's where this is headlined.
Yep.
And so, okay. But they got 26 million and they hope to do something. But okay, good for them. We'll see how they do it, because there's a state operative in every corporate board in China, so we'll see
absolutely
what that gets for them.
Well, and they have a lot of little rocket companies. Like, they have a lot. Like a dozen, more than a dozen. It's hard to keep track. Yeah.
All right. Well, it's good because Blue Origin decided they're not launching New Shepard anymore for a while. So there's a niche is opening up.
It did
for somebody else.
Yeah.
My final thing tonight is is this the joke of the day? Jim Cramer.
I know, Mad Money.
He's like
sure.
Loudmouth on on CNN or wherever. And the Mad Money guy, and usually, the joke is whatever Jim Cramer is pushing, you want to do the opposite most of the time. It's really true. These guys, I've been watching these guys say that for years. The guy's just insane, right? Well, now he thinks he knows something about the space market after looking at the SpaceX IPO,
right?
And he thinks it's going to affect the whole market. It could affect it very negatively, and this could have a $5 trillion valuation. It's going to suck the oxygen out of every market in the world. We're all going to die, right? And so with Jim Cramer's track record, I have to think, what? There's going to be a boom. Everything's going to be fine. The SpaceX IPO is going to open the floodgates for everybody. And, even an old guy like me will be living on the moon in 5 years. So, hey.
I think, I'm actually pretty surprised that Cramer hasn't come out and talked about this already. But seriously, dude, this space market has been real for 10 years now, like a
Yeah.
real market.
Right. And now we have real
publicly
exits.
traded companies and
Yeah.
everything, right?
We have real
So
everything now.
so he's just getting on the SpaceX bandwagon like everybody else. So he's got to say something controversial. But we have seen how a tweet or a post or a LinkedIn request or something turns into an extra $250 billion in their IPO. We saw it. We reported on this show a couple months ago, right? So now here, Kramer's like, oh, it's going to be 5 trillion. And I'm like, does that move the needle? Because this guy's got influence. You might disagree with his positions, but he's got influence. Does this by itself move the needle? We saw it happen twice already. We've seen it happen twice already.
But see, he's not the guy. This track record doesn't justify it. He's not. I mean, a lot of people say, even a stopped clock is right twice a day.
Right.
You can't even say that about Kramer. He's more the blind squirrel that finds a nut once in a great while.
Well, and yet he's got a giant audience, man. I wouldn't put it past. I would not be surprised if this one post single-handedly, even though he's saying it's going to create a bubble unto its own. That's his quote. SpaceX would create a bubble unto its own if the company gets a $5 trillion valuation.
I am curious about that now. So I'm going to just say to our audience, whoever's listening, whoever, how many people are listening to this on Spotify and Apple tomorrow, if you or anyone you know got rich listening to Jim Cramer, I want you to write to me. I want you to tell me about it. I'll say, prove me wrong, guys. Prove me wrong. Right, I'll bring it in. Sure. I want to see the receipts.
Yeah.
And on that, why don't we go to our guest tonight?
Yeah. Oh, I want to respond to Joe Luttrell. He says he was at Goonhilly last year. I know that because he was trying to do a deal with the UK government. It's an amazing place, so that's cool. Thanks a lot, Joe. And yeah, UAE, Prostrudo, right? Like, why isn't that offering going out to the UAE? It's crazy. There's so much money out there that's being missed, and they're going to have to jump through hoops to get there. So, yeah. And then Dallas has got a comment about the Axiom thing. Companies can't bid for government contracts unless they're in the country. Yep, absolutely. Mm-hmm. Which is why Axiom went there, which is why they're going to go to Germany next. So, yeah. Oh, and Prostrudo, I want to talk about this for a second. I know we're trying to race through time here, but I know personally that there are a community of SpaceXers. They're just waiting for the countdown clock around December or so for their stock to become liquid, and it might not take that long because it's going to go on the NASDAQ, and there probably maybe only be a 15-day holding period there. But there are some very, very smart spacers at SpaceX who are trying to band together and put together a $100 million fund. So think about that, right? They're all engineers. They all know how to build quickly and find holes in the market. And there's a flood of new capital. Those SpaceXers, the SpaceX mafia is going. It's a tsunami. It's not a ripple effect. It's a tsunami.
And the only question we have to ask ourselves, Mike, is how do we tap into that? as we always ask.
Right.
Okay. On that, I want to bring in our guest this evening. This is going to be interesting. He doesn't do a lot in the space area, but he's seen it a lot, and he has some comments. And his name is Ron Wiener. He's the CEO of the Venture Mechanics Startup Launchpad Accelerator, and it's been around for a very, very long time. And he has a lot of great stories to tell. We're going to get some insight into how incubators and accelerators really work in real time on the ground, and all the joy that you get out of doing that. Ron, welcome to the program. Come on in, man.
Great to be here.
Hey.
You will note, by the way, I don't do a lot with space startups at the moment, but our logo is a rocket.
Well, it's that accelerator thing. Yeah, I get it. Yeah.
So, you mentioned incubator and accelerator, and it might be helpful to just clarify that. A lot of people
Please.
don't know what they mean because they're so often misapplied. So, incubator is one end of the spectrum, accelerator is another end of the spectrum. I play in this entire spectrum. So, an incubator, somebody comes in, I have an idea, I haven't done any competitive analysis, customer discovery, modeling, exit strategy, none of that stuff. I don't even know how to run a company. I'm just a guy with an idea. And you give them some space, some of these incubators like Pioneer Square Labs here, right? They give them some office space, they sprinkle them with some mentor meetings, and can end up taking a huge chunk of equity out of the company for the privilege of a little bit of free rent and advice. I don't like that particular model, but I do find sometimes brilliant founders, brilliant idea, had no idea how good it is, but they're going to have to do a lot of work, maybe a year's worth of work before they're out raising money. Accelerator, the other end of the spectrum, the company's already doing $500,000 ARR, but they haven't been able to hit that inflection point. They don't really have a venture scale business plan to attract venture scale investors. Now, there's a lot of tectonic shifts going on right now as a result of AI, and it's changing everything about startups. Probably not as much impact on the space side, except when you look at things like using AI for designing the aircraft and all that. But in terms of the economics of a startup, there's a lot of changes going on. We'll talk about that, but incubator and accelerator, they're one or the other. Most of the accelerators. So here's the crazy thing: there's 200 incubators and accelerators in the United States, 1.6 million applications a year. Why? A lot of those are colleges. Every kid in the MBA program is required to go through it, and a lot of startups painstakingly apply quarter after quarter after quarter to get into some cohort somewhere,
right?
Because they think if they get in there, they're going to get funded fast. And it's an incredible misnomer. An accelerator does not mean you get funded fast. Techstars will tell you in their promotional materials, the average company that gets funded in 3 years that has gone through the accelerator. Okay, so I'm not a big believer in 90-day accelerators. I don't think you can do a whole lot to really help a company by sprinkling them with some meetings. Our model with our Catapult Accelerator is more of a 2 to 4 year engagement. They can come in as a pre-seed company or as a seed stage company, and we're with them through their Series A. Once they get their Series A, they got enough money, they can hire all their fractionals and all their mentors and stuff and go to the races. But I really prefer that early stage where it's much more creative, and you're looking for founders that have real insight, industry insight, not just youth. So our average founder is actually around 50. It's another difference with the other accelerators, right? Michael, you're right in the sweet spot. Right in the sweet spot. In fact, you have too much hair.
I do, yeah. It's gray. I still have most of it, but it's gray. Yeah.
Don't get me
Just
started.
down here.
I don't want to
okay.
hear about hair.
Yeah.
I just don't want to.
Yeah. So anyway, that was just a little background on the spectrum.
So give us a little bit of background on your history, how you got here. I only just learned just prior to the show that you've actually got 10 startups under your belt. I didn't know about that. I knew about 3. But what's your background?
So Bronx High School of Science, right, with Neil deGrasse Tyson, and all those folks. I always thought I was going to be an astronaut. Unfortunately, I had a stroke when I was 20 years old. That ended my bike racing career and any hopes of being an astronaut. I did eventually get my FAA in medical, so I've been a pilot for 40 years. And as you can see, I'm pretty good now. But 62 years old, I've been doing this for over 40 years. Before there was an internet, before there were any books on how to raise venture capital, I happened to live in Silicon Valley when I did my first avionics company. We did avionics and flight simulators. While I was doing that company, the Rockwell satellites were just starting to go up for the GPS constellation, and I was there for that transition from LORAN and RNAV and the old style navigation to satellite. So lots of brushes with space along the way, and we were a flight simulator producer. So continue to fly to this day, I've been on the boards of lots of companies. I have done 10 startups, and currently running 2 of them. I had 4 exits and 4 um, technically exits, but we
The
call them
hard way.
bankruptcies or wind downs, right?
The hard way. Yeah.
Which is pretty good, right?
Yeah.
And my
Yeah.
first exit was my 3rd company, which is also pretty good because the average founder goes through 3.5 startups before they get a liquidity event. And so over the years, I was fortunate that 3rd one was a magnificent 9-figure exit, and I only took $1 million in capital before we were taken out, right? So what's happening right now? That was called .com, right?
Yeah. Yep.
And so if you're lucky, if you think about it, guys, there is a cataclysmic economic event every 6 to 10 years, right? The PC bust, when I moved to California in '84, all the PC companies were blowing up. Then there was a black market in '89. There was of course 9/11, and it goes on and on and on, right? Mortgage crisis, COVID, the current Trump administration has had massive impacts with Doge and health tech and climate tech and everything. These are lucky timing or unlucky timing for founders, right? You got to be lucky in the beginning, you think, to get a good valuation, right? You hope that you're sitting on a nose cone is my favorite expression, right? Oh, all AI companies, we're sitting on a nose cone, valuations is going up, right? Well, the problem is when that bubble bursts, and it will, what happens to valuations, and suddenly you're doing down rounds, and it's extremely painful on the founders when that happens. And then for exit, sometimes you're forced to exit because a window is closing, the IPO window closed or whatever, and we got to just sell. Founders often don't understand, if they do get venture capital, which isn't always the best source of capital, but if they do, they are lashing themselves to that boat, and the tail will wag the dog. I raised 32 million for one of my companies, multiple rounds, 12 million before VCs ever came in, and yet it was the VC that hit their 10-year mark on their fund and had to liquidate the company because they're not going to participate in the upside of that after their 10-year term on the board, right? So I didn't know that was coming. I now know that that's a really important thing to ask the VCs. Where are you in your cycle? I don't want to be the last check written out of a particular fund.
Right.
That's 3 years into a 10-year
fund.
You
need time to grow. Yeah.
You need time to grow, and I was the first check in that fund, right? And it still happened, right? Because the 3rd CEO didn't really know how to grow the company. And so the company's still around, it exists, but it was bought by private equity twice since then. And they just cashed out to get their money back out. And everybody else, including myself, who had 7 figures in it, and 140 of my friends had invested 12 million before they did, right? All screwed, right? Oof. So a lot of things have to go right. I guess there's another analogy to space, right? Is a lot of things need to go right. And so the other thing I've done during the last 26 years, was I joined the investor side. So I've done dozens of investments into mostly technology companies. I've been running mostly technology companies, entirely technology companies, really. And I started building what today they call a venture studio. So Venture Mechanics 1, 2, and 3. 1 and 2 were in Portland. 3 was here 15 years ago. We called them venture catalysts back then, but basically we grew companies internally, right? So we'd go find the right management. We'd lead the funding. I had my own fund. Didn't need to go to other VCs. We would just have angels follow us into early stage deals that we were leading. And then 15 years went by till now, but really 12 years from before starting Venture Mechanics 4, and everything changed. And I will say, most inspirationally, the thing that most changed is around here, as you know, Michael, Chinese and Indian male founders are way overrepresented in this area, right? But nothing else was well represented 12 years prior. And then by the time we opened our doors 3 years ago, 80% of our founders were women or people of color. Only 20% We're white guys with cushy jobs at Google or wherever.
Wow.
And
All
there's
right.
tremendous amount of entrepreneurial zeal from people who have no plan B. They
Yep.
may be the first person to come to America, first one to go to college, first one to start a company, first one to get venture funding. They just literally cannot fail, right? They're so determined,
Right.
even though statistically they will fail. First, I always tell founders, your first one's probably a practice round. As soon as you own that, you'll feel a lot better about every harrowing decision you're perseverating over. If you're lucky enough to get other people to fund your education, and they really shouldn't do that. Smart ones join others, startups first, and learn what that journey is like
Right.
before they conscript other people to join them and lead them on this mission. It's difficult enough. You don't really want to do it without any training, right?
Right.
A little bit like Hail Mary. if you watch the movie,
Yeah.
wait a minute, what do I know about being an astronaut?
Not an astronaut. Yes, I like that.
Yeah. So I've lived in this space in between the investors and the founders, and in the middle is this incredible organism of mentors. Without mentors, no founder ever got funded. Without the pro bono assistance of people giving them free advice out of the goodness of their hearts because they like them, they want to see them succeed, or they're hoping that, hey, this thing goes and maybe I'll find a job here or a fractional client or something like that. And so they're really the lubricant that makes the whole machine work. So I started by building up a force of hundreds of mentors here in Seattle, and now we're starting to expand around the country and around the world as we're taking our Catapult Accelerator concept and going beyond Seattle. But we prototyped it here for the last 3 years.
Yep.
And it's a very uncommon way of doing things. There is no other program like it anywhere in the world. First off, we're extremely selective, taking about 8 companies a year. There are no cohorts. It's not a machine where we're cranking like YC or Techstars. We've funneled in about 2,500 founders like you, Michael, in the Seattle market.
Yep.
There are a lot of educational programs, pitch competitions. We do run a lot of diversity
Your
groups.
events are great. I really like your events. Just personal experience there. It's good.
And they're great because it's not. I don't have a day job. This is it, right?
Yeah.
Like you go to other events and some people are volunteering and everybody's relying on the other volunteers. To me, this is our brand. Like, it's really important that people get something real out of our events. But we were doing a tremendous amount of studying. So what do I mean by that? Let's use an aviation analogy. Do you know the number one reason that planes crash?
Pilot error, right?
Okay. Yeah. Running out of fuel.
Okay.
And then running into weather beyond the capabilities of the pilot or the airplane, right? Number 1 and 2.
Okay.
Wrong. Every chart starts with that. Every chart that the Air Safety Foundation has done forever is done that way. We did our own analytics because we had avionics that were guiding pilots, and we wanted to understand, what causes crashes and stuff. And it turns out the much more significant bit in that whole equation is, do you have a co-pilot? If you're a solo pilot, and you ever do something stupid on any given day?
Yeah.
Right. So, my instructor used to say, it's okay, just don't do it while you're in the airplane. Well, we do stupid things. We forget to put down landing gear or whatever. And when you got a co-pilot says, did you mean to land without your landing gear? Okay. So take that statistically. That's the biggest reason for plane crashes. You're alone and you make an error and there's nobody there to catch it. Right. Okay. There's always a right seat over there in most planes. But at least in general aviation, this is what happens. Airliners, people wouldn't want to get on the airplane, even though the computer can fly it, if there weren't 2 pilots up there.
And generally does on a lot of flights.
Yeah. And, the joke, and as long as I've been in avionics, 40 years, the joke has been, in the future, there will only be a pilot and a dog. The pilot is there to feed the dog, and the dog is there to bite the hand of the pilot if he touches the controls. Right? But right now, where we are today in our traffic control system and everything else, you want to see 2 pilots up there. So now let's carry that over to startups. The biggest reason that startups fail is not on the many charts you can pull up with a perplexity search. The reason that startups fail is they waste an incredible amount of time talking to the wrong investors way too early. They don't understand that a VC is going to write one check, maybe two in a year. And for that, we'll meet somewhere between 100 and 300 founders. So you meet a VC, they say, oh, let's have a meeting. You go home, pop the champagne with your
Right.
crew, and everybody thinks, oh, we're funded, we're off to the races. Or you
Right.
get into an accelerator, we're going to be funded, we're off to the races. No, you're there to edutain that VC. Their job is to learn everything they can about all the competition, where's technology moving, all this kind of stuff. But if you didn't do your research, because remarkably, and I was the same, I didn't know, and there were no mentors around and no books around on how to do this either. If you didn't know that this fund is only allocating capital about a third of its lifetime, the first third, and the rest of the time it's there raising their next fund and they need you, you're their product, right? Oh, if you funded me with my next fund, I'll fund Michael, meet Michael, right? So
Right.
they got to keep that pipeline going. But Michael, you ain't getting a check out of that guy until he closes his next fund. And every VC is optimistic.
I've got 3 conversations going right now where they're like, "Oh, you're next on our list as soon as we raise the next blah blah blah."
Sure.
Which at that point I
Yeah.
stopped listening. Yep.
Yeah.
Yep. Yep.
Yeah. So there's lots of reasons they won't invest in you ever, but they'll keep you on that treadmill because they are professional maybe sayers. They don't ever want to miss the deal that, oh my God, they got a contract with NASA.
Right.
Let's jump into the deal. You're probably not going to get that contract with NASA, but they'll never say no because that's their job, right? So let's talk about some statistics, okay?
Sure.
We throw around the term moonshot in venture capital all the time. But what does this really mean? 1 out of 100 aspiring entrepreneurs is going to incorporate and actually launch a company. All these people that come to our events, a lot of them still holding on to Microsoft, not sure they're really ready to jump out of the airplane. And so right there, you got 1%. Okay, of those that get pre-seed funding, 60% will die before they get to seed round. 90% will die before they get to a priced round. So only 10% are going to get to the promised land of a Series A, Series B priced round, right? Typically a Series A. And of those, in a good year, 25% will return any capital to their investors, including like a penny on the dollar, right? So that's why when you hear the power law, we got to invest in 20 startups, hope 1 or 2 become unicorns, make up for all the mistakes. I always hated that because as a founder, it's my blood, sweat, and tears and capital in the company. I don't want to be treated like a number, but to the VC, when they've shut me down in the past, well, we have to do what's right for our LPs. Let's take you out to dinner. No hard feelings. Well, no hard feelings for you. I lost my house.
Right. Yeah.
Right?
Yeah.
So,
there's some hard feelings there. There are.
All day long, I see posts as you do on LinkedIn, right? Oh, we're so excited. We got funded. And my PTSD goes, yeah, now you're going to find out what the rules really are because you probably didn't know how to read a preferred term sheet. Mm-hmm. And your lawyer, if you had one, your lawyer said, well, you're going to have to sign it because they pretty much don't do term sheets without these clauses. And the VC is going to tell you, oh, we never invoke that clause. So we would never do that. But our lawyers won't let us sign this without that clause.
Then 2 years later.
Yeah, that Chinese cookie thing where you read the fortune cookie and then add between the sheets. Right. So every paragraph in a preferred term sheet, add, we'll never invoke this unless we need to. Okay. And then they're absolutely going to invoke it, take your company away from you. They're, founders don't understand. They think it's all about what percentage of equity they have. Control comes from board seats, and very few things go to a shareholder vote. Your annual appointment of board members, some of which are contractual and you can't even change. Selling the company, the decision to sell the company has to go to a shareholder vote, authorizing a new VC round or appointing a CEO or something appointing CEOs is the board doing that. So, we try to teach founders, we see ourselves as sort of a finishing school. As you've seen a lot of our workshops, right? It's teaching you how venture capital works behind the scenes. I do a class every month. It's the favorite thing I do.
Yep.
Called Is My Startup, used to be called Is My Startup Venture Fundable? I changed it recently to Is My Startup Fundable?
Okay.
Because we never focused entirely on venture capital. It's what everybody thinks they need to get, but venture capital is a tiny percentage of financings in this country, in any country. There's other sources, and increasingly, and of course in space, you're going to get a lot of non-dilutive sources and competitions and all kinds of things like that up front. You may be getting SBIRs, STTRs. There's all sorts of capital sources, but there's also family offices and angel investors. And you look at some of the bigger aviation and space companies that have taken off. It's just some billionaire deciding that they want to do it. Right?
We see that a lot, actually. There's more than 20.
It's one of the most reliable sources in heavy aviation and space, because VCs fear to tread there, and their funds aren't going to last long enough, with the exception of some deep tech funds. Right? What's a deep tech fund? Instead of a 10-year span, it's a 15-year span. Right. They're willing to go 5 years to find out if that first check was worthwhile, and that's pharmaceuticals in some cases, and it's space shots. But the realities are 2.5% in a good year. 2.5% of companies that got their first check from investors will have an exit. And what's happening right now, that I alluded to before, is a tectonic shift. First time in a generation that there's been a structural rift in the venture capital fabric.
I want to really dig into this. We've got some comments in the Dr. Cathari, thanks a lot. And then Joe specifically asking about safes.
Sure.
We only have 8 more minutes, so you gotta dig into it, right? We gotta hit that one. So safes and what's happening with the free cash flow kind of companies.
Okay, so let me talk about that first. We started seeing all of a sudden LLCs forming, not C corps. Forever, I've been shouting from the mountaintops since 2009. It's stupid to start a startup as a C corp. You can endow tax benefits to your investors if you start as an LLC while you're losing money and they have any passive income. You can pass through your losses to them to offset that passive income. They're actually making money on you when you're still burning money. And so the LLMs are actually really well trained on this. So what started happening, founders went in there, okay, I want to do a startup, help me come up with a business plan. Okay, great, how do I incorporate? And the LLMs will actually guide you properly. And so I think that's partly what's been happening organically, is the starting as LLCs. Why? Because it creates optionality. So your early investors, now with agentic AI, you can launch a company with $300,000, get to cash flow positive, start growing it. And as long as, when you're making money, as long as you cover your investors' tax exposure, you can distribute just that much. You can still sit on the rest of the cash, plow it into growth, or you can do distributions if you want. In that structure, the founders and the investors are usually in the same class of stock. So everybody benefits, right? And then you reach a point where there's a trigger to go to C Corp. Either you get to 75 million in total assets, you are 3 years from exiting, and you want to get the QSBS tax treatment, which is a waiver on capital gains. And so everybody's going to do that. Or you're getting such good traction, you want to go get a VC round, you're going to need to convert to a C Corp to do that. But you're coming at it with a great negotiating position, much higher valuation, raising much more money, less dilution overall. So I put out a trial balloon. I've never had a LinkedIn post go so viral a week ago about free flow LLCs. I just needed the term for what this is, but it's basically free cash flow, right? That this gives you optionality to choose when you convert to a C Corp. And if you ever want to go to traditional venture capital, or stick with family offices or corporate venture capital in certain cases, that's a lot less valuation sensitive and can come in at a later stage. They don't mind LLCs in most cases. They prefer them. So that's been interesting. So then on the safe goes the same way with LLCs as it does with, they're adaptable to LLCs as it does with C Corp. If you download the YC Safe, it is going to say C Corp.
Yep.
But the problem with that is a lot of these companies have been taking the YC Safe, taking the money from investors, and then choosing not to do a price round. So they never convert. They're twisting in the wind. They're sitting out there,
Right.
no shareholder representation, no board representation, no minority shareholder rights. So we have a version that we created and gave to the world. If you go to our website and type in VM safe, Venture Mechanics safe, you can download an adjusted safe that allows a majority of the safe note holders to choose to convert after some period of time to common stock together with the founders at that valuation cap that was already predetermined. Yeah, most, 85% of safes have a valuation cap, and you did a quasi valuation already. And that allows them to have a seat at the table. The CEO is their board representative, right? So I highly recommend anybody doing a safe download that one. But also think about doing LLCs, because that is now, with the incredibly low cost of launching a startup because of agentic AI, that is becoming very, very popular. Most VCs, 99% of them, will have to walk right past those deals. They cannot invest in an LLC.
Yeah, that's crazy to me. I
yeah.
did not know that the other day.
I'm launching a new fund that will do a hybrid. We'll be able to do moonshot investments as C Corps as well as LLCs. And when they convert to C Corps, ultimately, they'll stay in the portfolio. But that's the first one I know of. There's a very large law firm, and they've never seen anybody do it yet. But I think that's going to be a trend.
Okay. I just want to throw this out here because our buddy, Dr. Kothari, is here, and he's an amazing guy. I just want to know, do you know anything about energy sector?
Yeah.
You didn't know that? Well, he's asking about what your interest might be in thorium molten salt reactors. That's been a big...
as in reactors?
Yeah.
I don't. The gentleman I told you about earlier is who you want to get on your show to talk about that.
Mm-hmm.
But no, that is deep tech, and I don't do very much in deep tech.
Okay.
Right now.
All right.
So.
All right. Well, I'm putting up your link for the that's the creates a new safe investment structure. That's the one.
Yeah.
Okay. I'm putting that link up right now. We only have 3 minutes.
So,
3 minutes. I know.
And so what we want to do, we do our crystal ball time. And so you can look at whatever sector you want to look at. You want to look at space, you can look at that. We ask you to kind of just get your crystal ball out. What do you think the world looks like in 5 years and 25 years?
So the big question is, will the supply of compute be able to keep up? And if it can't keep up, then will the price of compute infrastructure start going up and be a counterswing? So right now, it is cheap.
That would be straight to my heart. Like, I don't.
Yeah, well, obviously some people think space is part of the solution, and launching data centers up there. There's energy, there's water, there's chips, there's all of that. At the end of the day, is the word compute, and that's what you're hearing people in the industry saying. Right. It's all those things together. It's not one thing. Energy is just part of it. A lot of people trying crazy things like the terafab and all that to get there in the next few years, but there's a possibility it's going to actually become expensive to use AI, because it's going to go to the highest and best uses, and anything that isn't the highest and best use is going to be more expensive. And so now is the time to launch companies on AI, right? Like, don't wait. This is like 1997. Get your freaking website up. Every company is going to need one, and you can no longer, you're not a .com because you have a website. That's everyone's going to have one. It's table stakes. It's table stakes to be an AI, operationally an AI company, right? That's the thing that is completely rewriting all the books on how to start a company. And so I worry a little bit that some of the moonshot, be it biotech, reactors, things like that, other than the billionaires who are back in those things, it's never really been a good place for angel investors to play. Angel investors are going to run to these very safe deals here, they're cash flowing and everything else. And I think they're going to want not invest in traditional venture funds anymore. It's been a broken asset class for a long time. S&P 500 is a way better place to put your money in the last 10 years. But there are going to be new fund structures that will make a lot more sense. And you should invest in, deep tech stuff if you have a passion and a lot of industry expertise in that area. So listening to the Diamandis group on their Moonshot podcast, they think it's going to be GLP-1s. Kind of agree with that, and the new drugs that are coming out.
Right.
$1 trillion company, Eli Lilly, right? And compute is going to be the other part of it. So a lot of what we don't know that is going to absolutely wag the dog on Wall Street is those few elements that add up to compute, right?
Right. Ron Wiener, you have been an absolutely astounding source of information for just about everything on God's green earth in our community. And I know the folks watching tonight really loved it. We really loved it. Michael, I don't think we should be doing anything anymore unless we tap into him first and find out what he thinks. We're gonna run shit up your flagpole forever from now on. For being on here. So
I'll be sure to lubricate my flagpole.
So of course you will be back again. At least I hope you will. This is a fun
That'd be a
time.
pleasure. All right, guys.
Please stick around after the show for a quick debrief. And it was wonderful to have you. And we'll see you again very soon. Thank you for coming on.
All right, guys. Good night.
Thanks, Mr. Trudeau. Appreciate it. He's saying great guests, so that's always
absolutely.
Nice. Marty said the same thing. So did AJ, Dr. Cathari. So really, thanks, Ron.
I'm amazed. It was just absolutely blown away. Okay, Thursday, our guest will be Paul S. Mamakos, and he's been a contact of mine forever, it seems like. And he's the founder and CEO of Space Ocean Corp. And they're doing energy solutions. They're doing all sorts of wild, interesting things. And that's going to be a very great conversation as well. So we'll be having fun on Thursday. See you then. For Michael Lane and Sean Key, I remain Thomas Andrew Olson. Keep watching the skies.